Okay, we're rolling. Hola guys, que paso? How's everyone doing? This is Hala Pablo. Thank you for tuning in. I want to talk about the buzz right now, what everyone's talking about. The Bitcoin, the rollout of the Bitcoin ETFs, whether or not the SEC is going to approve it and how it's going to affect the price. I have an opinion on what's going to happen. And my opinion is we're going to see a sell-off. It's quite possible. Now, an ETF, you know that an ETF is a exchange traded fund, they're kind of like mutual funds, with some little differences. But it's basically it's an investment security, if you don't know what it is, and it is indexed to Bitcoin's price action. So, in other words, investors who don't really want to purchase Bitcoin and deal with storing it and all the stuff that goes along with hard wallets and all that can reap the benefits of the price action of Bitcoin by owning a fund or percentage of a fund which contains, I believe, the future Bitcoin future contracts or something like that. Anyway, and it's traded on an exchange like a stock or anything else. And so it is pending approval by the SEC, and that's apparently people are banking on like all the money that's going to flow into it, and it's going to pump the price. And so Bitcoin is considered digital gold. You've heard the saying it's digital gold. Well, I thought it would be interesting to go and look at actually gold, which also had its own ETF about 20 years ago. In fact, in 2004, mid-November. And what happened when gold had its ETF? What happened? And so here's a chart I pulled up, gold in 2004. The gold ETF intro, you see it's up here in this area. There, you see that the price action of gold with today's Bitcoin, this is today's current Bitcoin. I had this on a 12-hour, on a half day. Strikingly similar. We see this counter trend moving up with uncanny resemblance in the price action, as you can see, even though it was 20 years ago. Two completely different assets. Both of them gold, digital gold versus gold. But I thought this was interesting. I wanted to show you. And then in mid-November, when the ETF rolled, I believe it was November 18th, if you look it up, when it introduced its exchange-traded fund, its ETF, it had a sell-off inside the channel. It was also sitting on top of the macro resistance like we are here. And you saw it fell through the channel, fell through the structure, and it didn't actually bottom out until well into, January, March, February, April, I guess. So that's about 4 months, 3 to 4 months. It took the bottom out from that retracement on top of macro trend resistance, which was used, the ETF for gold was used as the catalyst for this markdown, for this sell-off. And so let's go now to today where we are in Bitcoin. And we could very well, maybe, I know a lot of people are banking on Bitcoin mooning once the SEC approves the ETF. And I contend that there is such a thing called herd mentality. And there is an entity called the composite operator or the market maker or whales or whatever. And they are institutional investors, and they make their money through the blood of retail. What does that mean? That means that they set up their trades in opposition to herd mentality. So you got all these retail guys with their mindset of good news, invest because it's going to moon. Bad news, sell. And so that's retail. Institutional order flow often does the opposite and uses current events as a catalyst to effectuate those changes and those trajectories that they're banking on. It's like a chess game. So if retail is buying, they're going to short. If retail is shorting, they're going to go long. It's always the opposite. Okay, so everyone and their grandmother right now who just got into crypto, who doesn't know really a lot about trading, is thinking that this is a good thing, that ETF, the ETF is going to cause Bitcoin to skyrocket. And it will eventually, but not at first. Not at first, I believe. I don't think it's going to. Now, I might be wrong, but you have to admit the track record on gold, on digital gold versus gold. There's a lot of resemblance thus far, and one can only assume that when the ETF, the gold ETF, the digital gold Bitcoins ETF is introduced sometime in the next few days, that we very well may have the same sort of response in the price action. Indeed, we're seeing now, let me show you something real quick before I sign off on this video. Let's see, where is it? Where is my, I can never remember where my brush is. Oh, here it is. Okay, it's where the circle is. I don't know if you can see if this is showing up on the chart, but we have a big supply spike in the volume at macro trend resistance. This is often this big predominating supply spike at this position is typically a death knell. It's a harbinger for a sell-off. It means that at this point right here, institutional investors are selling on top of this macro trend resistance area, especially after this long protracted wave up inside the ascending channel with demand volume that has been steadily decreasing throughout the duration of this trend, this uptrend here. Demand has been steadily decreasing. And then on top, and then you wind up on top of the macro trend resistance, and suddenly you get this protruding supply spike. We haven't seen anything like this thus far. Perhaps back here when the price action was sitting atop of the 0.5 Fibonacci line, which brought it down to macro trend support. And then we saw it come back up again and ride the 0.5 fib. But this is really the first time since back in August, or is that July or August of 2022, where the price action of Bitcoin has sat atop this macro resistance within this regression trend, this rising channel. And like we saw the supply spikes here, we're seeing again a predominant supply spike emerge. And right on the eve of the SEC's pronouncement on whether or not the ETF of Bitcoin is going to be approved to be sold in U.S. exchanges, so stock exchanges. So anyway, there it is. Gather what you will from it, and just proceed with caution either way. Anything's possible. I just wanted to provide my 2 cents on it, and let you do your thing at your own risk. None of this is financial advice. If you got anything out of this, I'd appreciate a like, subscribe. I try to keep it simple, no nonsense. Crypto, solid technical analysis. Like, subscribe so you get updates on it. I have more stuff coming out real soon. And follow these videos and learn how to stay safe in the crypto market. We also have a Discord group, very affordable, $20 a month. And I teach you how to do what I do. I'll teach you how to read all this stuff. Elliott Wave, Weiss Wave, Wolf Wave, Wyckoff, volume spread analysis, all of these things that can help you stay safe in bear markets and prosper tremendously in bull markets. Join the community. Check us out. I keep it extremely affordable because I believe in teaching people how to fish instead of feeding you fish every day. It's much better to learn how to hunt, learn how to fish, so you can go off and do this yourself, and you're not relying upon people on YouTube who could be shilling something or really don't know what they're doing. Anyway, that's enough from me. I've got stuff to do. I got to finish my coffee, and just wanted to share this with y'all. Okay, you guys have a great day, and we'll talk again soon. Adios. Bye bye.